While the SEC stays quiet, the actual money moving through AI trading agents just crossed a number worth stopping on, over $100 million in assets, inside accounts that trade themselves. No regulator has confirmed a single rule for any of it. Here's how big this got, this fast, with nobody officially watching. Robinhood's agentic trading beta, the one that lets Claude, ChatGPT, or other AI agents place real trades without asking first, has grown to close to 100,000 connected accounts, with assets inside those accounts now exceeding $100 million. It launched in beta on May 27. It's now expanding from stocks into crypto, after more than 70,000 accounts joined the equities and options version alone. eToro's version, called Tori, has completed over 500,000 trades in its first year and is used by more than a third of eligible members. Coinbase says its AI agent ecosystem has generated over $4 million in revenue, and a single feature called Banker earned more than $30 million in June alone. This channel has spent 3 videos on one open question: does anyone have to confirm these agents act in your best interest, the way a licensed advisor legally does? That question mattered in June, when this was a beta feature with a few thousand users. It matters differently now that it's 9 figures of real assets, expanding into a second asset class, with one platform's single AI feature clearing $30 million in a single month. The scale argument that used to cut against regulation, it's too early, too small to need rules yet, doesn't really hold anymore. It's not small. And here's the part that hasn't moved at all: the SEC's July 31 deadline to answer 13 direct questions from House Democrats, including whether these agents or their developers need to register as brokers or advisors, came and went with no public response, and as of this recording, still hasn't been answered. So the honest state of things is this: the product scaled past $100 million while the regulator was still sitting on a deadline it set for itself. Growth didn't wait. Oversight hasn't caught up. If you've got money in one of these accounts, nothing about your legal protections changed today. That's exactly the problem this video is pointing at. The only real document governing what happens if the agent makes a bad call is still the platform's own terms of service, not a regulatory floor. The bigger the balances get, the more that gap matters, because a $100 million plus product with an unresolved liability question isn't a rounding error anymore. It's a systemic one. This isn't a video saying the sky is falling, the platforms haven't done anything they didn't disclose, and adoption at this scale is a real signal people want this. It's simply this: the dollar figures moved fast enough that wait and see is now a much more expensive position to hold, for regulators and for anyone with money in one of these accounts. This channel will keep tracking both numbers, the assets, and the answer, whenever it actually comes. Does knowing the real dollar number change how you feel about using one of these? Comment below. Subscribe. This channel covers the actual SEC response the day it lands, not weeks later.